I continue to get the question from business owners across Canada on whether or not they should be paying themselves a T4 salary or a T5 dividend or a combination of both. Well, by the end of this video, I'll give you all of the necessary information that you will need in order to determine how you should be paying yourself. My name is John Moakler, and I'm the founder of Moakler Wealth Management. And for the best advice on how to protect you and your family, subscribe to my YouTube channel and hit the notification bell so you'll be notified when we launch a new video. So the answer to the question on whether or not you should pay yourself a T4 salary or a T5 dividend, well, the answer is it depends. But for the bulk of my clients, we are all paying them a T5 dividend. So let's get into it. Back when Jim Flaherty was the federal finance minister, he tried to change the tax laws and take away a lot of the benefits that T5 dividends had over the T4 salary. And since that time, I've only met a handful of accountants who actually understand the differences and why a T5 dividend is still the preferred route. So let's get into it. If you pay yourself at least a T4 salary of $154,000 per year, then you can maximize the contribution room that you can put into your RRSPs. However, if you watched my webinar on financial planning, you would have found out that the only one who wins when it comes to RRSPs is Revenue Canada. So as a business owner, you have other choices in how you design your pension plan. And if you become a client of ours, then we will design your pension plan in retirement so that the bulk of it is tax-free income. See, with RRSPs, they are 100% taxable on your personal tax return in retirement. And so when we design plans, we try to avoid RRSPs for our clients. So back to the paying yourself $154,000 of a T4 salary. The second thing is if you do pay yourself that much, you would be putting in the maximum contribution to the Canada Pension Plan or the CPP. And I also actually have a video on this YouTube channel that shows you, because we've crunched the numbers and it's very simple math. As a business owner, contributing to the Canada Pension Plan is a negative return on your money, because you will never get back what you put into the CPP in retirement that you've put in through all of your working years. Because as an employer, if you're contributing to the CPP, you're paying both the employee portion and the employer portion. So you're paying double into the Canada Pension Plan. So now we have seen two reasons why paying yourself a T4 salary is not all that good. But let's get into another reason as to why paying yourself a T4 salary might make sense. So if you have children and you are able to take advantage of the child care tax credit, then it does make sense to pay yourself a modest T4 salary. And so we've crunched the numbers. So if you have one child, then it does make business sense to pay yourself around $11,000 or $12,000 of a T4 salary. And if you have two children, then it makes sense to pay yourself around 17 or 18K of a T4 salary. But the balance of it should be in a T5 dividend salary. So here's the benefit. If you pay yourself a T5 dividend, you actually avoid having to contribute to the Canada Pension Plan or CPP. And so by doing that, you're saving at least around $7,000 or $8,000 per year that you would have had to put into the Canada Pension Plan. And the federal government earlier this year announced measures where they're going to actually ask you to increase how much you're putting into the Canada Pension Plan. So as a business owner, if you're paying yourself a T5 dividend, you can avoid having to contribute to the Canada Pension Plan. So think about it this way. If you're a business owner and you are paying yourself a T4 salary and you are contributing to the Canada Pension Plan and you go to retire and turn on the Canada Pension Plan, if you pass away and if you do not have a spouse, then the Canada Pension Plan is gone forever. However, if you pay yourself a T5 dividend, as we're recommending, and you save that money each year and you invest it, you're now in control of that money, you'll have a larger bucket of money in retirement. And upon your passing, you will have money that you can actually leave to your beneficiaries. So, in summary, as a business owner, you have a choice in how you pay yourself. You can pay yourself a T4 salary or a T5 dividend or a blend of both. But in most cases, what we're recommending here is a very modest T4 salary if you have children. But the bulk of how you should pay yourself is really in a T5 dividend in order to minimize the amount of taxes that you are paying. If you'd like to learn more about how you should be paying yourself now and in retirement, click on one of the links below to apply to become my client. And if you like this video, give it a thumbs up, subscribe to my YouTube channel, and share it with a friend. I want to thank you for watching. And always remember, when we design financial plans for our clients, we always make sure their money outlives them in retirement.